Jai Hind friends. If you are new to this channel, then please hit the subscribe button so that whenever a new video is uploaded, you can get the notification. And if you like the video, then please hit the like button. This will keep motivating me to make these videos. In this video, we are going to discuss about 8 companies, and these companies were mentioned by some of the viewers, so they wanted me to discuss these companies. So let's start. So first company is CCL, also known as Continental Coffee Limited. And if I look at 1 year return for this company, 1 year return has been 36%, which is good. 5-year return has been 90%, okay. And if I look at the maximum chart pattern, maximum return has been 8000%. And we can see the chart pattern is going from the bottom left to top right. But one thing to notice in this company is that it is very fluctuating in nature, and during this period the returns were not that great, and after that you can see it gave an upside, but it was still very fluctuating. Then there was a dip during COVID, and after that it again started moving up, but still you can see the dips. Let's check more details about the company. So as the name suggests, this company deals in the production, trading and distribution of coffee. Its current market cap is 7,300 crore, so it's a small cap company. And if I talk about the competitor of this company, its competitor are Tata Coffee, which is a listed company, and its competitor is also Nescafe, which is owned by Nestle. And now I'm at the quarterly numbers for this company, and from the last few quarters you can see the sales are increasing at a good rate. In the last quarter also sales increased by 26% on year-on-year basis, which is a good growth. And operating profit margin of the company is also decent. It was around 22% in March 22, which decreased. We all know the reason, it is inflation, and it is now currently around 19%. If I look at the yearly numbers, then in the yearly numbers also there is a good increase. Sales were around 1081, which increased to 1100, then 1200, then 1400, and now to 1900. And the profit also is consistently increasing, you can see. And here if I see the profit compounding growth, profit compounding for 10 years has been 19, 5 year 9, 3 year 10, and in the last 12 trailing month it has been 18%. Sales compounding for 10 year, 5 year, 3 year is around 10%. For 12 trailing month it is showing good numbers, which is around 36%. Return on equity is also decent. Stock price CAGR also is good. 10 year 36, 5 year 15, 3 year 46, and last 1 year 36%. So looking at the numbers for this company at this moment, the company looks good. The company is increasing its revenue, it is increasing its profit. So if somebody wants to invest in this company, they can do so. There is no harm in investing in this company. You will not lose your money. But since this is a small cap and we have also seen the chart, it is very fluctuating in nature. So if you are able to deal with that fluctuation, you can also hold this company if you have conviction on this company. But if you were to ask my opinion, I would have not invested in this company. The reason being simple, that since it is a small cap, and I would invest in a small cap if it is growing its profit at a very good rate. If a company is growing its profit at a rate of 18 to 20%, then I would be able to find large cap companies also who are increasing their profit at a rate of 20%. If I have to take a risk with small cap, then I will take a risk with a company which is growing its profit at a rate of 30 to 40%. But this is my view. In case you have conviction on this company, you can still go with it. It is a okay company, a average company. Next company is Magellanic Cloud Limited. And if I look at 1 year return, 1 year return has been 82%. If I look at 5 year return, 5 year return has been 1374%. And if I look at maximum chart pattern, you can see it's very dangerous. It was almost flat for this period of time, and then it provided a sudden upside here, then it provided some consolidation, then again a big upside here. And if I talk about the business of this company is in the business of IT services and software development. The market cap of this company is just 2000 crores, so it's a very small company. And now I'm at the quarterly numbers for this company, and from the last 2-3 quarters the sales are increasing at a good rate, which is good. And the operating profit is also increasing at a very fast rate. If you look at the operating profit in December 2021, it was just 4 crores. March 2022 it was 3 crores, then it increased to 19, 23, and now 34. And in the yearly numbers also we can see a very big upside. In the 12 trailing month the profit is around 79 crores. And if I'll go back, then in March 2017 the operating profit was just 2 crores, then 7, then 10, then it remained flat around 11. Then in 2021 again it dipped to 2 crore, then it increased to 8, and now an increase of 79 crore. So this company is super fluctuating, and this profit that this company has shown is massive, because what it is implying is that in period of 1 year it has 10x the profit that it has earned, which looks too good to be true. And with these type of companies which are very small in nature, you do not know whether these companies are publishing their correct numbers or not, or they are doing some accounting fraud or not. I'm not saying they are doing any accounting fraud, but I'm saying the risk is always there with these kind of small companies. And if I look at the shareholding pattern, you will see that the promoters have decreased their holdings and the holdings has been taken up by the public. So if the profit is increasing at such a high speed, why are the promoters selling their stake? That is one question which is coming to my mind. So if I have to take a decision on investing into this company, I have doubts on this company. I would stay away from this company at this moment. I would rather keep this company on my watch list and then see how it is progressing. But at this point of time, I would not invest in this company. Next company is Cosmo First, currently trading at 555. If I look at 1 year return has been in negative minus 50%. If I look at 5 year return are still better, 197%. If I look at maximum chart pattern again is not a chart pattern which is going slowly in the upward direction, although it is going from the bottom left to top right. But you can see the movement, it has been flat almost for this period of time, and suddenly it gave an upside, and again it has now started coming back. And if I look at the business of the company is engaged in specialty films for packaging, lamination and labeling applications. And the market cap of the company is very small. It is just 1500 crore, so it is almost a micro cap company. And if I look at the yearly numbers, the sales are increasing, although it was almost flat for 2019 to 2021. Then in 2022 it increased, and in the 12th trailing month again there is an increase, but the increase is very less. And the operating profit is also increasing. However, in the 12th trailing month there is a dip, and that is why we are seeing a dip in the share price also. And if I look at the profit growth looks decent. Sales growth also looks okay, around 10%. Return on equity is also good. Stock price CAGR is also looking good. So to me it looks like a okay company. It's like a lottery ticket company. If it starts going up, then it goes around 1000% in just 1 or 2 years time. But if it will start going down, then you will not know that for how many years the stock will remain at that price. So if you want to take the risk, I think you can take the risk, but do take the risk with very small amount, because this is a high risky company. So invest that much of amount which you are willing to lose in these type of company, and invest at a time when the company is down and not at a time when the company is at its high. Next company is Indigo Paints, and I'm directly on its maximum chart pattern. This got recently listed in 2021, and from the time it got listed, it has shown a negative return of 61%. So this company, I think most of you must be knowing, it belongs to the paint sector. The market cap of the company is 4,700 crore, so it's a very small company. Now coming directly to its profit growth, because if somebody wants to invest in a paint company apart from Asian Paint or Berger Paint, then the profit of that company should be increasing at a higher rate than Asian Paint and Berger Paint, which I think in this case is happening. The company's profit is increasing at a very high rate, and the sales growth also has been very decent. Return on equity also looks good. So in terms of the numbers looks good. So if you want to take risk in this company, I think you can do that, but again follow the same rule. Invest very small amount of your capital in this company, and always your first preference should be the market leader of that sector. So your first preference should be Asian Paint or Berger Paint in this case, and then you should invest a small portion in Indigo Paints, because it is increasing its profit at a faster rate than Asian Paint and Berger Paint. So there is a possibility that in the period of maybe next 5 to 10 years, if it keeps on increasing its profit at this same rate, it can provide better return than Asian Paint and Berger Paint also. But you also have to remember one thing, that whatever competition is coming into the paint sector, the companies which are going to get impacted by that competition are the companies like Indigo Paints, which are small in size. The companies like Asian Paint, Berger Paint, they will continue to grow because they will continue to take the market share from smaller companies and from unorganized sectors. But the companies which are smaller in size, they are going to get the maximum hit because of the competition increase. Next company is Timken India, currently trading at 2,765. If I look at 1 year return has been 29%, which is good. And if I look at the maximum chart pattern also looks good, and it is going in the upward direction, which is good. And if I talk about the business of this company is engaged in manufacturing, distribution and sale of anti-friction bearing components, accessories and mechanical power transmission products for the customer base across different sectors. The market cap of this company is 20,000 crores, so we can say this is kind of a mid-cap company. And in the auto ancillary bearing sector, this company is the leader, which is a good thing. And now I'm at the yearly numbers, and for 2019, 2020 and 2021 the sales were not that great, but in 2022 the sales started increasing, and now for the 12th trailing month again there is a slight increase. And similarly the profit also was increasing, then it dipped, then increased, and now again an increase, although the increase is not that great. If I look at the other details, the profit compounding looks good. Sales growth also looks good for the 12th trailing month. For the other period, which is 10-5-3, it is around 10 to 15%. Return on equity also looks decent, and the stock price CAGR also looks very good. So to me, this looks like an average company. If you have conviction, you can stay with this company, but you will have to keep monitoring its results. Next company is Brightcom Group, currently trading at 17 rupees. And if I look at 1 year return has been negative 79%. 5-year return has been 564%, and looking at the chart, I can understand why people are stuck in this company. And if I look at the maximum chart pattern again looks very dangerous and very manipulative. So these are the type of company wherein most of the retail investors get stuck. You can see for such a long period of time there was no movement in this company, and suddenly it started going up, and when most of the retail investor got trapped, then the operators started selling their stake, and now most of the people are trapped at this loss. Now if I talk about the company was formed in 2010 as Lycos Internet. The company was renamed Brightcom Group in 2018. The company is a global provider of online and digital marketing services to direct marketers, brand advertisers, and marketing agency. Okay. The market cap of this company is just 3,500 crore, so it is also a small cap company. And now I'm at the quarterly results for this company, and you can see from December 2019, the sales increase was just 1%, 11%, 1%, 2%, 11, 2, and then from September 2021 onwards, the sales started increasing at a very high rate. 72% increase in September 2021, then 130%, then 77, 126, 52, and now 41. So you can see there is now a decline in the year-on-year sales growth. And if I look at the yearly numbers, in the yearly numbers you can see it was almost flat at this point, then suddenly it almost doubled, and now for the 12 trailing month it is around 7,200. Same with the profit increase at a good pace at this point, and here also it is showing a good increase. And same is reflecting in the profit growth, sales growth, return on equity is also looking good, and stock price CAGR for 5 year, 3 year is looking good because of that high upside in the share price movement. Now coming on to the shareholding pattern, and in the shareholding pattern you will see that the promoter holds just 18.47%, which is an alarming sign in this type of company. And you can see that from March 2020 onwards they have been decreasing their stake, and it has now come down to 18%, and the maximum holding that we have in this company is with public. So these are the type of company that you should stay away from, and that is why whenever we do a check or a full analysis of a company, we check 4-5 things. We check the chart pattern, we check the financials, we check the shareholding pattern, we check the business of the company. And with this shareholding pattern, it would have been a complete no-no from my side. I would stay away from this type of company. And as I mentioned earlier also, you cannot fully trust these small companies because you do not know if they are projecting the correct numbers or not. And as a retail investor, we would not know that, and that is why it is always suggested go maximum with large cap, then mid cap, good renowned companies, and then go with small cap with only small portion of the capital. But in that also try to go with market leaders, try to go with companies which have moat, which have competitive advantage, barriers to entry in the business, because those are the small cap companies which are going to become big in the future. So instead of going with these type of companies, you can go with companies like Moltech Packaging. You can go with other companies which are market leader in their sector, and try to stay away from companies which go up very quickly, because they are not going to sustain that growth. Eventually they are going to come down, and that is what has happened in this company also. Next company is LG Equipment, and sometimes it is amazing how Indians copy. Just look at this name LG. The way it is sounding, it is reflecting a brand which is this, but actually it is something else. But nevertheless, let's look at the company and its chart. So it is currently trading at 428, and if I look at 1 year return has been very good, 57%. And if I look at 5 year return again has been very good, 203%. And if I look at maximum chart pattern, we can see that this company also started giving a rally post 2020. Before that, if I look at the return, you can see in the period of 20 years company provided return of 164%, and only after the rally post COVID these companies are showing an upside. And this company's business is of manufacturing and supplying air compressors and automotive equipments. The market cap of the company is 13,000 crore, so it is a small cap company. And if I look at the profit growth in the last 12 trailing month, the profit growth looks good, and similarly for the sales growth in the last 12 trailing month, the numbers looks good. Return on equity is okay. Stock price CAGR is very good because of the recent rally after COVID. So to me, this company does not have anything special. This is just an ordinary company which gave a run up after 2020 rally, and you do not know when this company is going to give a similar rally again. So try not to invest in companies just looking at its returns. Try to also see if there is anything special in their business. Try to see if they have any market leadership in the business segment that they work in, or if they have any kind of moat. If not, then it becomes very difficult for those type of companies to give consistent return. These kind of company can give good returns. For that, you need to time them correctly. If you would have bought this company in the year 2020, then you would have got good returns. But if you have invested in this company from the time it got listed and after 20 years also, your return was just 164%. So I do not see any point in investing in these kind of businesses. So my advice will be to go with market leaders first and then do your experiment, whatever experiment you want to do with small cap companies, but be ready to lose that money also. Our last company is Chola Finance, currently trading at 732. And if I look at 1 year return has been flat, nothing. 5-year return has been 140%, very good. And if I look at the maximum chart pattern, maximum return has been 13,000%. And this company belongs to the NBFC sector. Its market cap is 60,000 crores, so it is a large cap company. And now I'm at the yearly numbers for this company, and you can see that the revenue is continuously increasing for this company. Revenue in 2019 was 7,000 crores, then 87, 95, 10,000, and now 11,000. And the profit also is increasing. In 2020 there was a dip, but after that it recovered, and then 2,000, 2,900, and now 3,300. And here you can see the profit compounding growth of this company. Profit compounding growth looks very decent, very consistent. Sales growth also looks decent, close to 15%. Return on equity is also good, close to 20%. Stock price CAGR also is good for 10 years, 29%, 5-year 20, 3-year 62, and in the last 1 year it has been in negative, -2%. And now I'm at the shareholding pattern for this company, and promoter holds around 51.5% stake in the company. FIs have been also increasing their stake. They currently have 19% stake in the company. DIs also have a good stake, around 21, and the remaining is with public. So out of all the companies that we have discussed in this video, this is the only company which I think we should invest in if somebody is interested in their business, because this company has also provided consistent return to its shareholder, and it also belongs to a very renowned group in southern part of India, which is Murugappa Group. So before closing the video, what I want to say is that if you are making your portfolio, if you are building your portfolio, I'm sure you would want the best return from the portfolio. In order to get the best return, what you need to do is you need to have the best companies in your portfolio. You need to have the market leaders. You need to have the fastest growing companies in your portfolio, because then only you will be able to generate good CAGR growth in your portfolio. If you are going to keep average companies in your portfolio, then you are bound to get average returns also. This brings us to the end of the video. Please remember, these were all my views. Please do your own research and study also before taking any buying and selling decision. And in case if you have any question, or in case you want me to make a video on any specific topic, you can mention it in the comment section also. So bye for now. We'll meet in the next video. Thank you.